Subscribe to my channel Report Stock.
Okay, let's unpack this. Today, we're digging into Adobe's Q3 numbers. And it looks like, well, maybe more than just numbers, potentially a big strategic shift happening. Our mission here is to pull out the really important bits from their report for the quarter ending August 2025, to show you what's really going on under the hood.
Exactly. You see those big headlines, right? Top line revenue, earnings per share, and they grab your attention.
Yeah.
But to really get a handle on the company's health and where it's headed, you have to look at the actual business units. That tells you not just what happened, but crucially, why it matters. It sort of reveals the strategy.
And yeah, on the surface, those headlines, they definitely look pretty solid. Adobe reported total revenue of $5.99 billion. That's up, what, 10.7% from last year? And it actually beat Wall Street's estimate, not by a ton, but 1.5% over the $5.9 billion expected. EPS, earnings per share, also look strong, $5.31 compared to $4.65 last year. That also beat the consensus estimate of $5.17. So quick glance, looks like a win.
Right. And what's fascinating here, I think, is that while these are good numbers, definitely strong overall, for anyone really watching Adobe closely, the real story is how they achieved that growth, the structure of it. These figures are a great starting point, sure, but they make you want to dig deeper into the specific segments, see what's really firing.
Absolutely. So let's peel back that layer. Where did Adobe really shine? The digital media segment, for example, that had a fantastic quarter. Revenue hit $4.46 billion. That's an impressive 11.6% jump year over year. And it smashed analyst projections of $4.38 billion.
Yeah, significantly beat them.
And the ARR, that's the total digital media annual recurring revenue, $18.59 billion, also a bit above forecasts. This segment is clearly the powerhouse.
And if you connect that to the bigger picture, it's pretty clear, isn't it? This consistent strength in digital media, it's not just growth. It really shows how indispensable Adobe has become in the whole creator economy. They're basically the OS for creative pros.
Yeah.
That's a powerful position, a real moat, very sticky. And look at the subscription revenue, the core of their model now. It grew 11.8% year over year, $5.79 billion, beating estimates. Digital experience, also solid, $1.48 billion, up 9.3%. These are the engines really demonstrating that core strength.
Okay, but here's where it gets, well, maybe a bit more complicated. Because it wasn't all soaring success stories. While those core parts are thriving, other areas, they saw some noticeable drops. Revenue from publishing and advertising, for instance, came in at only $50 million. That missed estimates, and it's a big year-over-year drop, minus 15.3%. Quite a contrast.
And this isn't just a slight miss. It feels like a real signal. It points towards Adobe strategically moving away from maybe older models like perpetual licenses or smaller stuff that doesn't fit the core focus. It suggests they might be deliberately trimming these legacy streams to really double down on subscriptions.
Right, a calculated move, perhaps.
Could be. You see it in services and other revenue, too. Down 11.6% to $129 million, also below what analysts expected. And products revenue, even steeper, a fall of 17.1% to $68 million. Missed consensus there, too. So, yeah, it paints a much more nuanced picture than just those positive headline numbers. These parts are definitely facing, let's say, strategic headwinds.
Okay, so this mix. Strong core, shrinking periphery. What does this tale of two Adobes, if you will, mean for investors? Because it seems to connect to the stock's recent movement, right? Adobe shares were actually down slightly, minus 0.3% over the past month. Meanwhile, the S&P 500 was up over 2%.
Right.
And there's that Zacks rank #4 sell indicator, suggesting maybe some near-term underperformance. Why wouldn't those strong headline numbers translate better immediately?
Well, that slight dip, even with good top-line growth, it suggests investors are doing exactly what we're doing. They're weighing that really strong core engine, the creative tools, the subscriptions against the drag from these shrinking segments, even if they are smaller. It shows, I think, a market that's looking beyond just growth percentage. They're looking at the quality of the growth, the diversification, maybe the future focus. For anyone tracking Adobe, these numbers aren't just, a quarterly update. They're kind of a test result for their big shift to cloud and subscriptions, seeing how well it's truly embedding.
Right. So wrapping up this deep dive, Adobe had a strong Q3 overall, no question, powerfully driven by digital media, by subscriptions. That core looks solid, but it also faced, or maybe, like you said, engineered some pretty big declines in publishing and advertising, services and products.
Yeah, the less strategic parts, perhaps.
So considering these results, this thriving core but shrinking edges, What does this tell us about the landscape for a tech giant like Adobe today? How do you think they'll manage this kind of strategic tightrope walk, leveraging that creative dominance while pruning other bits? And what does that imply for their long-term innovation and market leadership? Something to think about.
Subscribe to my channel Report Stock.